Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday the RBA released its minutes and highlighted that a further rise in the Australian dollar may lead to slower growth and lower inflation. Also, the report said that household prices and household debt warranted careful monitoring. Today we have the release of the wage price index for Q2. The forecast is seen at 0.5%. It will be closely watched for any increase. So as the Australian dollar remains relatively weak against the greenback, as it slowly regains momentum, the target down to the downside holds at 77.5570. Now do be a little bit cautious, purely for the fact is that the RSI is showing a little bit of bullish divergence, and we could see a rebound from this level of 55.70 and look back up towards 78.55, and beyond there a potential sell zone towards 79.0515. With the dollar increasing to the bullish side overnight, the index is now looking towards 95, which in terms could see the euro weaker. With the trend taken out now, 117.0510 looks towards immediate target of 116.2535, with a broader uptrend holding at 115.1020. It is viewed though that the market will be closely watching tonight the minutes from the Federal Reserve latest policy meeting. Investors will be looking for more hints on timing of the next US rate hike and clues on how the central bank plans to trim back its balance sheet. Alongside this, we have also the release of the ECB monetary policy meeting accounts, which could benefit from a weaker euro from the given report release. Dollar yen has held to a relatively bullish stance since rebounding from that long-legged doji. Now taking out the level of 110.50, I am looking for a further bullish move up towards 111.0515 and reassess from there, just in case we get a rejection. However, a sustained break would see the next move up towards 111.7075 or even towards 112.7080. So it depends on how short the market is, but we do have bullish confirmation from both the stochastic and the MACD to support this view for a further test with 111.0515 awaiting. The pound has continued to, or should I say the British pound has continued to be negative, and from the overnight's release of its UK CPI, the forecast figure was at 2.7 but actually came in at 2.6. The pound took a heavy dive towards that support objective of 128.50 and now achieved questions where the market may turn now. What is interesting is that UK Brexit Minister David Davis made further comments and put further jitters in the market with concerns that there will be no number on the Brexit divorce bill by October, and also said that the Brexit transition period must conclude by the next UK election. Now a break beneath 128.35 would see further scope to the downside and give a target of 127.0515. Any advances now looks for a cap around 128.90. Well, the gold weakness is now paused at the support line at 1,266. I do expect to see further momentum returning. However, from a technical point, it is concerning that the market is now falling back towards its bearish outlook. A break of 66 will negate any upside move and look back towards 1,251 to 52. Resistance now seen at 74, and a break above there would give further conclusion that the market could recover towards 79 to 86. And wrapping up with oil, the market is still bearish. I'm still looking down towards $46.70 as a potential target and reassess from there. Any advances should find good supply from 48.60, 65 and firmer above at 49.60. That wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day that's ahead of us.